minutes. Great. Thanks for the team and thanks for the panel members. I find that everyone has shared very insightful information and has been very inspiring discussing all of those. So I also have a couple of questions. I hope that this is going to be a very, very vivid and conversational forum that is coming up that we could discuss. So let's start with the first one that we have connected from a Tencent Platforms audience, which is, with the demand from shareholders, pension fund contributors, and taxpayers becoming ever more ESG conscious, what are the main concerns that asset owners are looking for when requiring an ESG-led portfolio? You just finished the talk around this area. Why don't you start with this question, Eddie?
Okay, thanks for the question. Thanks, Angel. So for now, there's about over 80% of the asset owners actually they're either evaluating or implementing the sustainable investment in the portfolio. So I think for those already implemented the ESG investment framework or adopt the PRI investment principle, I think they actually want to first to make sure that they fulfill the fiduciary duty. I think as an asset owners or investment manager, I think the key thing is to act for the best interest for their beneficiaries. And a lot of beneficiaries have a lot more emphasis on ESG. I think that's one. And second, as I mentioned earlier, I think, and also Jeffrey spent a lot of time to elaborating the return, right? I mean, lots of academic studies shown that if you incorporate the ESG investment in the portfolio in the medium to long term, you could achieve a better risk-adjusted long-term performance. But then some of the concern or challenge for some of the asset owners would probably be sometimes it's very hard to integrate the ESG data that's from different source, different provider, different exchange might have slightly some different disclosure requirements. So how do they integrate all these data into internal proprietary model to make it more comparability? I think that's one. And second, when you're making all this, you have to hire a lot of people. And now, as I know, in the market, it's very hard to hire ESG specialists because, and you have to pay a huge premium for hiring, some investment professional that they are dedicated to ESG. So I think cost from the perspective is some of the concern. And third, some of the challenges that whether there's available product or whether they could identify suitable investment manager to fulfill some of their investment, some of their ESG investment need. I think those are the things that they're concerned and why have to do that.
Great, very interesting. I think that you've mentioned there's like trade-offs. There's like, so how do you guys as investors to navigate this as the shift from like a world financial shareholder primacy to a broader stakeholder capitalism encompasses for a like far-reaching agenda, including like climate change, worker advocacy, and the pursuit of gender, racial diversity, and more. So how do you navigate the ESG trade-offs? Jeff, what do you think?
Sure. So I think this is a very good question, and this is one thing that I've definitely covered at the start of my speech. It starts with all of us, and it starts with these great events from Sharp Forum and CityU. It starts with all of us devoting our time and our efforts to educate the importance of these things mostly from a social responsibility perspective. That's point number one. Point number two is to make sure that, as Eddie said, ESG talent is definitely in demand right now. So to make sure you hire the right people, you look at the right resources, you investigate, you spend the time to understand that what you are investing is, first of all, certified ESG and correctly certified ESG, right? And that's why I've always pushed towards exchange traded products where the definitions and the transparencies is paramount, where you actually understand what you're going at. And then again, lastly, the third point is with the great work that sort of I think all of us sitting here doing with Phillips Foundation and Angel, your work with United Nations and especially directions, hydrogen ETF, etc. Right? That is just, I think, most important in terms of pushing it out there and letting investor know that these products are available and these products are good products from an investment perspective, from a social perspective.
Thank you, Jeff. That's very interesting. I think that anytime, it's better to be front runner. It's better to be at the moment. It's better to be started by individuals, and then you will later leads to a bigger group of people participate. And Philip, how do you view this from like a foundation point of view? I think you're muted at the moment.
For the Nature Conservancy, and like all investors, we are also an investor of the Nature Conservancy's own foundation's endowment fund. The very key question here is people will ask, what is the transparency level? Jeff and Eddie already mentioned that. Then the second part is, so it's transparent. You can look under the hood. Is your fund, your portfolio really ESG? So they need to be able to verify. Verification is number 2. And number 3, if you verify, is it standardized? So standardization so that you can compare to the benchmark and to other funds. And Eddie also mentioned that being standardized so that it's comparable. And so finally, you get transparency, you get verification, you get standardization. What do you achieve? Are you achieving the environmental outcomes, the social outcomes, the governance outcomes that are measured? And are they being met? Very simple. 1, 2, 3. Are you achieving your goals in those 3 points?
Great. Maybe just an add-on comment and a discussion among 3 of you, since all 3 of you have mentioned so much emphasis on the topic of transparency. So global collaboration must approach in ESG in a way that is transparent and consistent, flexible, innovation, sustainable, sensitive to cultural differences, dynamic, all of those. But we see that ESG, EU has a structure at the moment, and then we see that Hong Kong has a different structure. Do you see a global kind of structure that will be coming out, promoting out soon, or what challenges do you see in facing a global push into like a global metrics regarding ESG?
I can very quickly take this question.
Sure.
First of all, I think it's very nice Angel is asking us all the tough questions, and we definitely appreciate that. No, and I think it's serious questions to be discussed, and that's why we have the Paris Climate Accord. That's why we have very concrete sort of standardized goals of carbon neutrality that multiple countries set up. Because sure, how do you implement it exactly? Is it hydrogen? Is it nuclear? How much electric vehicle stuff? It's very dependent on country, dependent on economy. And I think there's a wide range of research suggesting that sort of a lot of the developed nations needs to do more because they've done the developing with sort of dirty energy, right? But taking into each other's considerations and sort of each different country's different circumstances, it is important to set sort of goals that everyone can inspire to, everyone knows is good, and everyone can achieve to, like keeping global warming within limit, and also having these sort of global organizations, which is why, because you asked the tough questions, I'm going to throw it back to you. I'm sure United Nations and your experience here, you probably have the best insight out of all of us to sort of to explain how that global goal. I don't know if you want to add anything to that.
Right, sure. Thanks for throwing the difficult question back to me, Jeff.
That's what I'm here for.
Yeah, that's a very interesting question. I think as someone who was working at the United Nations before, I think that the importance the UN really tries to participate as the one that's like raising the flag and having people to participate in. But as I said, like net zero is impossible without the participation of the both public sector and private sector. And of course, there's a lot of emphasis on public companies to conduct ESG and having those reports, because I mean in a way it's easier to putting the pressure on public companies, but net zero is impossible to achieve without the participation of the private sector. So I think that what the United Nations is trying to do is to really raising the flag and also encouraging all the participants, all the stakeholders to really participate in this section. So great. And then now let's jump to the second question, as Nikki has put on the slides right now for us. It is from the Huangju platform audience. The question is, as we all know, futures is well known for its hedging function. Is the ESG futures, like ESG index futures or other green ones, a good objective to hedging? Can you give investors some tips when investing ESG futures? I mean, Jeff, you're the investor, so that's your question.
I'm sorry to hoggle the airtime, and I'm sure the other guys have a lot of things to add on this. But let me take this one first, because I did specifically mention futures in my presentation. Of course, it is well established. Futures is an extremely important tool, both from a hedging perspective and also both from an investment perspective, right, for speculators and producers alike. I think as for tips, it is important to distinguish the two. Are you investing or are you hedging, right? If you're hedging, you need to have a plan of your hedge. You had to understand what instruments you're using, and futures and options are great instruments. Which one would you prefer, right? And it is important to look at what risks exactly you're hedging and how to sort of pinpoint and target this risk. That is why futures is so great, because there's different asset classes in different areas, and the futures can pinpoint those risks. But on the same time, what is your plan if something goes wrong? A lot of times, markets do create a lot of volatility and unexpected consequences. Are you introducing other unintended variables? Like, for example, are you increasing your FX exposure, or are you increasing exposure to one certain sector over another once you hedge? Is it a perfect hedge? What happened to basis risks, right? These are all very important things for hedging, right? And for investing, I think it's very similar, but you need to have a different mindset. You need to first of understand what is your expected return, what is your risk preference, and what is your investment horizon. These are the key starting points, right? And for example, for ESG, Eddie mentioned this, that you're expected to generate excess return, but this is in the long term. And as such, investors should have a generally more long-term view when you look at ESG investing and try to capture that excess return, right? And lastly, not to sound like a broken record, sort of exactly what instruments you're choosing is, and understanding the intricacy details, it is important, right? For overall broad market risk, definitely ESG futures, index futures is good. For commodities, if you are looking at electronic vehicle commodity and raw material risk, then definitely ESG sort of commodity futures is great. But if you look at specific targets, like and that's why sort of direction is so important at creating the hydrogen fund, ticker HJEN, right? And that's, you get that pinpointed exposure. And for ETFs, you get much better sector control. And maybe Eddie can chime in. Direction does actually inverse and leverage ETFs, which are very similar to futures, which has a great work in risk control as well, right? So I think all of these things you need to understand and before you hedge, yes.
Yeah, I will add on few comments on Jeff. So that definitely, like immerse ETF is an investment tools, as exchange traded product that give investor for hedging for short-term purposes. And apart from like hydrogen, actually people right now looking more at like circular economy. So there's already some available ETF that actually track this benchmark. If you want to construct a portfolio towards a more green or more ESG investment cautious, then you could start to think about whether you want to look at your portfolios, look at your investment objective, and see whether you want to trim down some of your traditional portfolios and add on some more ESG sustainability type of ETF in your portfolio. If you believe, right, I have strong belief that that the companies with higher ESG score or rating could potentially outperform in the long run. So you could actually use ETF as a starting point to construct your ESG tilting portfolios.
Mm-hmm. Right, as you both have mentioned, like ESG investment has soared in 2021. Philip, would you like to add comments into that? Do you see that as the investment has been soared, the actual changes has been initiated or implemented on the ground?
Yes, so we're definitely seeing a huge amount of money piling into ESG and environmental impact funds. I mentioned it can be as high as some estimates, $113 trillion, and you can go down to several hundred billions. When there's a lot of money, everybody jumps in, right? But eventually, the market will sort itself out. So we feel that this is a time when you need experts that can bring in the science to know what they're doing and can verify what they're doing to build trust in this ESG market for sustainable finance.
Right, thanks, Philip. Why don't we jump to the third question that we have at this moment, since it has been raised from an overseas audience, that is, as enterprises attach the importance to ESG reports has also become one of the important information disclosed by a company. Many listed companies have begun to issue their own green bonds or green funds from the perspectives of green finance. From this angle, how to assess whether these companies are really doing green finance instead of greenwashing? This is a very key question, I think. Philip, why don't you address this one?
Thank you very much, Angel. How do you avoid greenwashing? That's a very critical question. The thing is, we have to assume that investors are smart. Otherwise, they don't have the money to start investing in the first place. So investors will be looking very closely at all so-called ESG funds, sustainable finance funds, and green bonds. The Nature Conservancy, we serve as conservation and science advisor to a lot of funds to make sure that everything under the hood of these funds, the engines, the wheels, they are really ESG. You also have third-party verifiers, such as, for instance, you have Pricewaterhouse, Fitch Ratings. There's also technology such as Diginex, the major shareholder, which is Fitch Ratings. They not only do bond ratings, they also look at the ESG scores of every company. And they provide the technologies through, for instance, one of the platforms I mentioned, Diginex. On your laptop, on your desktop, you can track on real time a company or the funds, the portfolio inside the funds, whether they are really ESG all the way across vertically, across the value chain, supplier chain, down to the customer, or horizontally across different areas of the company or the fund's overlapping areas. So there are many ways to verify that you are not doing just greenwashing. For TNC, we are also issuing not directly us issuing, but through our general partners, green bonds as well as blue bonds. We also do debt for nature swaps, where we make countries promise that if we restructure their debt, turn it into equity, that they will promise to at least protect 30% of their oceans. And we've achieved that in Belize, in Seychelles. Now, how do we prove that? It's verifiable. Not only is it verifiable, but we are starting to show outcomes, because in the areas where the countries like Mexico, Belize, and Seychelles, through our debt swap arrangements, debt for nature swaps, they have protected even beyond their promised 30% of their coasts and oceans. And we have seen that the livestock and biodiversity of the fishes and corals in that area have increased 4 times. So things can be verified. How? When there's money, there's a lot of people who will jump in. And there's a lot of people who will come in as the auditors, verifiers. They will provide technology to verify. The scientists will jump in. So the end of it all, the conclusion is it's not something to worry about, but everybody should be careful what they're investing in. Always do your due diligence. Okay, things can be verified, and if you can't verify it, don't invest in it.
Interesting. And from two investors, from your point of view, how does ESG change due diligence from the traditional M&A, like assessment? Like how does it change? Like, can you emphasize on the due diligence part that Philip has discussed about?
Sure, I'll take a crack at it first. I think what Philip said is extremely important. There are independent sources like CME uses S&P, Direction uses, I think, Index. There are independent sources that looks at ESG investing, venture rating, PricewaterhouseCoopers, etc. Also, I 100% agree with Philip saying one needs to do their own research and have your own understanding, have sources you can trust. And that's why we look at history, right? That's why we know that different foundations, as Philip alluded to, has a long history of investing in or caring about this factor. And if suddenly a company that never cared about this factor suddenly started caring, it's a positive sign. We like to see the change, but one needs to have a healthy amount of skepticism, right? And then the third part of sort of due diligence is that sometimes when you do very details, I would also leave it to the professionals, right? That's why hiring a good ESG financial advisor, looking at ESG ETF companies, looking at ESG exchanges are important as well, because I can personally say I have spent the time looking into this and do understand, sort of this field a little bit more because of the effort I have and the amount of time I have followed. And I think that part is extremely important as well. Just quickly 3 points, yeah.
Well, I would possibly add, if from the institutional investor perspective, so if possible, I think those investment managers have to actively engage with the management team and understand how they incorporate the ESG metrics in their company. So if they're going to do a diligence on a company that issuing green finance, definitely you have to know what's objective, what is that for, and how many portion of that money will actually really investing in green related project or infrastructure. I think that's one. I mean, second, for some companies, they will disclose or issue their ESG sustainability report on an annual basis. So some are very interesting. Some only have maybe 1 or 2 pages, which means probably they don't care much about ESG or sustainability. And some have more than 200, 300 pages, where it's a bit exaggerated, where probably they are greenwashing. So both are red flags. So that's some of the tips that, when investors access the public information, that's something they could look at.
Thanks, Eddie. I think that's very interesting. I have a question for you three. So ESG principles are not that cheap to follow, as you all have mentioned in some parts of your presentations. And companies, as we also know that, as Jeff mentioned at the beginning, that companies with higher ESG record scores is proving to generate more profits than the lower ESG scored ones. But those are mostly for listed companies. So they have the size, they have the amount of money to attribute to the part of ESG. What advice would you have for SMEs, though, those who are passionate, those who do care about CSRs, those do want to participate in a social responsible management style of the corporation? What advice would you have for the smaller and medium-sized companies to start their ESG planning in a cost-effective way? Why don't we start with Jeff, and then we go to Philip and Eddie?
Okay, sure, thank you. So again, this is a very valid question, and being running us SME right now, I think I'm well aware of the associated potential cost with ESG and trying to transform your business overnight with the pressure. It does add a lot of pressure, and I suggest you don't do it, right? What you need to do is you understand this is a long-term sustainable investment or into your own company, right? So no, we don't want you to, indulge on it one day and then have no money left for a long-term product, right?
Right.
So I think that is very important. But secondly, it is a lot of times you give what you can, you give time, you give you pass on information, you spread the word, and as a company, everyone can sort of do their part, no matter how big and small. You can still donate personally to charities. You can work with great organizations to promote this idea, right? I think that's point number 2. Number 3, this is specifically for finance companies. You can choose to invest in ESG listed funds or ESG companies, right? And do your part to help. And the added bonus is that they do, over the long run, tend to do better. And even if you're not a finance company, you need to ask the questions: who are your suppliers? Who are your partners? Are you sourcing ethically? Are you sourcing from green sources and correct sources? And while there are potential costs associated with them, and I completely understand that one can't sort of do everything at once, but sort of taking the baby steps and doing what you can, you understand a lot of times you're getting more value for your money, more value for better return on your investments, figuratively and literally when you do ESG.
Indeed. Do as you can. Philip, what do you think?
I think
What advice would you have for SMEs?
for small and medium enterprises, again, when you're just starting out small, set your mission goal and your values. Put that front and center on the company profile. And now let your suppliers and your customer be the judge, and they will see it. When you order from your vendors and suppliers, when you sell to your customers, people who care about doing business with you will see your vision and your mission goals and your values. And are you doing what you're saying? And if people find out that you are not sticking to your values and your mission goals, they will take their business elsewhere. So you'll never become one day a listed company if nobody gives you any more business, or your vendors say, no way, we don't want to. You say you treat everybody fairly, but you delay your accounts receivable by 60 days or forever. It takes forever for people to collect their receivables from you. In the future, nobody's gonna sell you their goods. So up and down the value chain and across, you just have to live your values in order to achieve your mission.
Great, thanks. Philip has been very emphasizing on business ethics and having the mission and value being set and follow them. Eddie, what would you add to this question?
Yeah, I totally agree on what Philip and Jeff mentioned. I think setting the mission is key, and then advocate it among all the staff so that the staff, they know, even before they join the company, they know this is part of your corporate culture. And even a small company doesn't matter, because even for large listed companies, sometimes they don't exactly know how to transform to be more ESG oriented company. So I think just do it bit by bits, and starting from maybe internal, right? So how you set your compensation plan, make sure it's gender equality. So you could starting something from internal, and then look at the value chain, right? How could I procurement system? How could I source a better supplier, more green friendly? So I think they could do step by step and create mission and deliver and promise what actually the action follow the mission. I think that's the key. If they lay out the mission, you have to follow it. Then people will see you gradually doing it, you reveal it. So I think it's similar to what some of the large companies doing as well.
To add on to this question though, like many would comment that at the beginning or at some part, they think that holding, something like ESG might undermining some companies' competitiveness. How do you balance this two? Does the driving of the ESG agenda meaning sacrificing the company's financial returns? Jeff, since you're nodding, I think you're ready to take this question.
Okay. I'm not gonna nod next time. I'm gonna shake my head and look up. So I think there's 2 ways to approach this question, right? Back to my sort of earlier point, I don't want anyone, as important as ESG is, I don't want anyone to bankrupt themselves over, right? That's not the point. We want to add sustainable long-term value to this cause. So I think that's point number one. And point number two, I think Philip really mentioned, and so the Nature Conservatory is a perfect example of that. Catering to ESG does not necessarily mean a cost in financial. Sometimes it means an increase in financial, be it from your reputation, more loyal client base, better customers, higher margins, sound investments. And I'm sure a lot of the lands that the Nature Conservatory invested in has been excellent for them outside of the ESG part, right? And I think that is important. We need to sort of escape the notion that these two are always in direct conflict. Of course, there are short-term sort of trade-offs one needs to make, as one needs to make in any business. But I really do think long-term these goals align. And it is very heartwarming for me that society is moving towards that. They are rewarding these ESG type businesses, right? And I think that's so important. Yeah.
Great.
I just want to reinforce what Jeff said. Our investment, the primary focus we always look at is that there is no trade-off, that you can be socially responsible, environmentally responsible, treat your employees nice, be fair to your suppliers, be fair to your customers, and you will actually make more profit. It's very simple like that. Good people will build good companies, and good companies will make good profits.
I like Philip's mention that there's no trade-off on this part. I think that's very, very, very sincere and authentic about how business world's supposed to be. And Addie, what do you think? Do you think that how do you balance these two? Especially at the beginning, I mean, there's definitely some like financial returns, like the balance of the trade-offs. Like, how do you manage that?
I think right now, compared to like 5-10 years ago, there's a more ESG cautious investors. And I believe that still more cautious ESG investors would eager to put a more, maybe higher valuation on that particular stock. And I think from another perspective is that if these companies, they're more ESG cautious, probably they could avoid a lot of fine or penalty by the government. So see about in the last 10-15 years, there are some, oil and gas company, they spill over the oil in the sea, and actually they get fined because they don't have a very clear objective on the ESG. So that's why they have to implement it to make sure that, if that happened, they will do something before, while, and after. So I think from investment perspective, as we mentioned earlier, and a lot of academic studies show that if you're investing in the more ESG cautious portfolios in the medium to long term, you could achieve a better risk-adjusted return. So generally speaking, I believe that within the same sector, if you are more ESG cautious, I believe that generally speaking, the risk may be lower compared to their peers.
Right. Thank you. Given the development, as three of you have mentioned, the development of ESG, I mean, you've also called 2021 the year of ESG. Given the development of ESG and its application in finance since this is the forum that has been hosted for CTU Hong Kong, what advice, what opportunities in terms of startups or employment prospects does ESG create for students? Philip, what do you think? Let's start with you this time. I think you're muted.
I think there's a lot of opportunities for the coming graduate classes for business students and scientists, engineers across the world. I mentioned the enormous amount of money that is going into ESG, not because it's fashionable, but because everybody knows that if we do business as usual, as we have done since the 20th century, we are not going to have a future. Our children, it's not even going to reach our children's generation. We probably, in our generation, we will not survive the choking of the air, the pollution of the seas, and the deforestation of our forests. So it's very critical right now to do this, and everybody is very much piling into this effort, joint effort around the world. So I think it's very good it's a very good job market, I see, for students in any discipline, but especially scientists, okay? It's not enough just to be able to balance your books. You need to know the basic science, because as we can see in the last few years, you know, there has been a lot of rhetoric that has been anti-science. But if we don't use science, what is there to stand on? So I would say that any business school students, you don't have to go quickly take up another science minor to your business major, or if you are a science major, it may not be necessary to pick up a business degree, because today with education we can learn everything on the job and online. Okay, so immediately go out there, look at innovative technology, use innovation, work with people, and show you're passionate, that you want to change the world, be a change agent. And certainly enough, I think around the world we can reach our carbon neutral goals. We can reach our goals to save oceans, save forests, save wildlife.
Great, such a great answer. I think you've went beyond what only just business students can do. I think all students can be part of this, because it's a climate, it's a planet that we're living on. We're all contributing to the sustainability of it.
I just want to add one thing, which is that I invite everyone in the audience and the panel that if you want more, obviously there's a lot to digest tonight, but if you want more information, just go onto our website, nature.org, and everything that I've been sharing with you tonight, you can find it in more detail, plus even more resources, whether it's for education, for business, for technology. Please welcome and sign up as a member of the Nature Conservancy. We are the largest environmental NGO in the world. The third largest landowner in the United States. We own tracts of forests, prairies, mountains.
That's
Thank
great.
you.
Yeah, I can't wait to visit the US or visit like the natural reserves place. What do you guys have to add on this, Eddie?
So I absolutely agree that there are increasingly more and more opportunities in financial and investment sectors on ESG related role, such as the ESG analyst, product specialist within asset management, index provider, right? So basically help develop, implement, monitor the firm's level ESG methodology, the best practice, work with investment team, engaging with the listed company on assessing the ESG related matters, launch or develop any new ESG product, ESG data analytics reporting. So there's lots of different things surrounding ESG. Some of the role will be part of within the investment team. Some of the fund houses, they will put ESG as a standalone team. So an aspect would be on Big Four consulting firm, where they provide ESG strategic solution, corporate sustainability management, identify ESG strategic initiative, and what Philip just said. I think there's a lot of free online resources that you gain more knowledge, and also probably there's some public exam. You could basically take some exam and get to know, have a more structural way to understand what ESG exactly means within investment or outside of investment world. So I think that's some of the things, but absolutely it's a bright future for ESG related opportunity.
Great.
I guess I just want to add, of course, ESG investment is so huge right now. There's plenty of jobs. Grandly's always hiring, and we're always looking for talent. So, and we're very focused on this area. But I think, Angel, you weren't exactly nodding, but you sort of probably have a very good experience on the non-finance side, right? You came out and you went to United Nations, and now you work at Shanghai Sustainability Communications Advisory, etc. And which is much more, probably closer to Philip and less purely finance side. maybe I think it's interesting. How did you, wanting to do this job, and what opportunities are there to follow your path, which is probably, the most ESG out of all of us, maybe not Philip, but definitely more than me.
Great. I think Jeff really is interested in being a moderator as well, I can tell. Well, yeah, to answer this question, thanks for throwing these questions back to me, because I do want to tell all the students that the United Nations do offer a lot of free and online and certified programs for whoever that is interested in the area of climate change and sustainable finance. If you log on to UNCC Learn, it's a website that has been, and also UNFI. So it's the website that the United Nations has been providing to the people who are interested in the topic and really wants to learn about it. And it also, provides your certificate after you graduate, which you can be very happy about. It does provide you a very comprehensive view about ESG or sustainable finance, or areas that covers more than just that, as gender equality and many, many others. So I think, speaking of this view, I'm actually very, since when I was first started my work in the United Nations was 2016. So at that time, ESG wasn't as popular as how it is today. So back then, I guess we were more talking about the social side of sustainability. So we really tried to focusing, as for the projects I was working on, was focusing on SDG, for example, SDG 2, no hunger. And, those are like the basic needs of human beings. I really want to emphasize this to the audience, is that while we're at one hand talking about ESG, the listed companies, the public companies that are generating revenues for our society and, the growth of our areas, but there are also a lot of least developed countries, at least developing countries like Haiti, where I've been to, where you don't even have a rooftop, where you are living in a tent, where it's raining outside, also raining inside while you're at home. Those experience tells me that there's there's a huge imbalance, first of all, of the world's development, of what is being developed, what it is in a developed world and what it is in a very least developing area. So first of all, there's a huge gap in between. Secondly, the gap, I think I want to emphasize this sentence, which is every social issue is a business opportunity. So there's also a lot of business opportunity that has, bloomed out of it, from as first of all, to balance this and to provide the living kit to the kids that are in the third world countries, that are in the least developed countries, are also, I think, social work that people needs to do. I'm very glad from a point of view that is, I'm not a finance person, but to see that the financial world is really driving money, driving the investment into the area, because that is when we see, the financial incentives are the drivers of a lot of areas, are the main drivers of these areas. We need them to build, a better tents for the students, better food, enough food provided for the students and things like that. So I do want to tell people about that. There is another side of the world where people aren't talking about their dreams. It's because they're hungry, and they're hungry that, when they are hungry, they can't even think of the knowledge, the insightful, the meaningful things we're getting. So I guess that is the point of view I want to share. But drawing back to this, I think I do want to throw these questions to the financial guys and, our foundation guys. It's like when you talk to your clients, though, I mean, they're quite in the finance of the world. When you talk about ESG, are they aware of it? To what extent are they aware of it? ESG, 3 elements. What do they want to focus on the most? Because sometimes that we say that environmental has been the key at this moment. What about social and governance? Yeah. Eddie, shall we start with you?
Yeah, sure. I think this topic has gained more popular in the last 3-5 years. So say, for example, if an asset owner is a pension fund or foundation, right? So when they're making some sort of investment, normally many of them, they already incorporate some sort of like ESG metrics in the firm level. So when they hire the external investment manager, depending on the investment mandate, investment objective, but definitely in the last couple of years, there's a more mandate that is tied to ESG related or sustainability related. So I would say that from institutional perspective, this one has, so last year, I think particularly COVID started, when you look at some of the article, wow, every day, basically you look at something surrounding like ESG. So I would say that, from institutional investor perspective, it definitely gain a lot more awareness. From retail investor perspective, so there's statistics show that for the ETF or mutual fund penetration, actually the retail money actually gain more traction. So in the probably 5-10 years ago, maybe institutional represent 80%, 20% is retail money. But there's some shifts where retail investment money also a bit more cautious of ESG. So the investment percentage has shifted, like retail close to like 30-something% and institutional 60-something%. Still, institutional investors dominate the ESG investment. And I think that's important indication, right? When you talk to retail investors. So a lot of bank or private bank, basically they have a set of internal procedures to evaluate and assess. So to put the rating, whether it's an ESG fund, as I mentioned earlier, SFC also have some code and rule to regulate whether you could claim or you can get this fund as an ESG certified fund. So I think it create more awareness and transparency, and investors are easier to make decision if they want to go for that ESG label fund rather than a traditional fund, which probably without less ESG metrics. So I would say that in general, definitely much more awareness compared to 5 years ago.
Great. Any other?
I'll very quickly. First of all, I do want to say that Angel is such a great moderator. I'm not trying to do the moderator job. It's that she has a wealth of information that I think it's unfair that is not shared with our audience today. I think maybe his experience is very similar from my experience when I first encountered ESG in maybe 15. Around that time, a lot of it, to be honest, is focused on large financial institutions. A lot of times, state-owned enterprises, sovereign wealth funds, and big pension funds, state pension funds, etc. Right? And it pains me a little to say this. A lot of it was actually more Europe-driven, especially the Scandinavians, rather than working in New York at the time, US-driven, right? And these big institutions naturally have an incentive to look at that, right? So I think that's point number one. Point number two is that as I moved back to Hong Kong, there was a period, in the late 18-19, there's less emphasis on ESG, but with the Chinese policy of carbon neutrality right now, with the sort of predominance of electric vehicles, retail penetration on ESG is extremely wide and evidenced by ETFs and mutual funds. So all the clients knows about it, all the client talks about it. They care a lot about society. They also care a lot about the excess return, right? And does it exist? Is it real? Is it not? And they often ask me that. And just to answer your last question very quickly, yes, environmental is probably the most visible and most sort of talked about part of ESG. But I think a lot of investors, especially sophisticated ones, care about S and G as well, because as I mentioned, a socially responsible company with good governance helps create excess return as well. And actually, it can lead to more environmental research as well. So I think they're all equally important.
Great. Thanks, Jeff.
Yeah, I think that for the average consumer, there's been studies shown, especially among the young people, would they pay more for a product if they understood that the company that made it is environmentally, socially, and also has very conscious in environmental, in social, as well as also have good governance, that the product they're using is sustainable, and they are willing to pay up to 20% more. They may buy less, but they don't mind paying more. So I think that the power of the dollar of your wallet is going to become very important in making sure that people will be more ESG conscious. And I'm sure that pretty soon, come up with ESG scores for any. So I think it's going to gain increasing importance.
Thank you, Philip. Thank you. Thank you for all the very insightful knowledge and perspectives you have shared with us. And I really appreciate that we get to discuss the important issue and the future of ESG sustainability together. Thank you, Nikki. And thank you, CTU MBA. I'm going to give the moderation back to you so you can finish up with us. Thank you.
Okay, thank you. Thank you. Such a discussion is wonderful and practical, and much appreciate our professional speakers. They really share a lot. And I can see that there are more questions coming out from different platforms and Zooms. And I suggest that our audience, you can leave your email to us, and then maybe we can answer your questions by email, okay? Ladies and gentlemen, it is hard to say that we are approaching the end of our night. And I would like to thank all speakers for their incredible contribution tonight and for making our knowledge sharing possible. Also, appreciate all the sponsors today, Banju and Grandly. Thank you for your full support. At this moment, I would like to extend our deep gratitude to the head of CTU MBA Professor Kevin Zhang and MBA Officer Ms. Zirko Huang to give our team professional and patient guidance. Lastly, on behalf of our organizing committee, a big thank you to our advisors and all MBA members' efforts to support this fruitful shop forum. This is the end of the forum for today. Hopefully, all of you can enjoy our discussion and find it useful for your understanding about ESG and sustainable finance. Thank you again, everyone, and please take care. Thank you.
Thank you.
Thank you.
Thank you.